Hello, everybody. Good to see you, and thank you for joining us for today's Tax Insights Live webinar. For those who haven't joined before, who don't know me, my name's Sarah Gardner. I'm the founder and managing director of Allegro Tax. We are a specialist tax consultancy working with lawyers, accountants, and other advisors who don't have a tax department, but whose clients need tax advice, and working alongside them to provide that advice to their clients. And as some of you know, we have a monthly series of webinars on a variety of tax topics designed to help advisors learn a little bit more about tax issues so that they can have a conversation with their clients if their client asks them a question, and spot the times when they might need to call in a tax specialist to help. So today I'm delighted to introduce our guest speaker, who'll be taking us through one of the most talked about developments in employment tax for some time, IR35, and in particular the implications of the PGMOL case. And I always think the interesting thing about IR35 is that it never seems to stay still for very long. Just when we think we understand employment status, we understand what needs to be done, and we know what's happening with off-payroll working, another case comes along that gives us something to think about. And the PGMOL decision is no exception. It's generated a lot of discussion amongst advisors and businesses and contractors themselves. I'm sure clients, lots of us here have had clients asking what this means in practice. So hopefully this session will be helpful to you, because fortunately we have an expert on hand to help us navigate the case developments. So our speaker, Glenn, specialises in employment taxes and employment status, advising businesses on IR35, off-payroll working, wider employment tax issues on a daily basis. And he's been following the developments in this area very closely. So he's ideally placed to explain the PGMOL case to us and the wider implications of it, and what advisors actually need to be doing in practice. So without stealing any more of his material, I will hand over to Glenn Huckster, who'll introduce himself and then take us through the case and its implications. Over to you, Glenn.
That's great. Thanks, Sarah, for that warm introduction. And hi, everyone. For those of you who are not familiar with me, and as Sarah mentioned, I'm an employment tax specialist. I've been in tax now for well over 35 years. I started out at HMRC, moved into personal tax, and then a mixed tax role, including corporate tax, before moving into specialising in employment taxes for about the last 15 years. I've started my career down on the South Coast in Dorset, working in some large independent firms and top 10 firms, before moving up to London in 2015, working with a number of top 10 firms on employment taxes. In my last role, I was national head of employment taxes for a top 12 firm, before deciding that actually there's something different we can do around employment taxes here in terms of its offering. So I started up Employer Tax Hub to provide those specialist consultancy services around employment taxes in July last year. So yeah, Sarah, thank you for reaching out and inviting me to speak today on, as you quite rightly said, an IR35 topic, which never seems to stand still for too long.
Thanks, Glenn. And what I'm really interested in, and I'm sure you'll get into this, is whether we're actually seeing, as a result of the case, or whether you think we will see any shift in how tribunals are actually weighing up the factors such as control, mutuality of obligation, all the things we talk about all the time. Or is it more that we're still in the same legal territory, but with a new fact pattern backing up the same position? And I'm also really interested to explore, and I'm sure the advisors on the call will be really keen to know, to what extent they need to be going back and looking at previous decisions they've made, previous assessments they've documented, and revisiting those. So I'm really interested to hear your thoughts on those things among everything else.
Yeah, no, that's great. Thanks, Sarah. And I'll be covering those. I have prepared a short presentation, and once that's over, we'll have some time for Q&As as well. But essentially, Sarah, we will be looking at the landscape in terms of employment status, what the PGMOL case brings, and hopefully it does bring some stability when we look at determining employment status. But we still are in the appeal period for HMRC to challenge the first tier tribunal ruling from earlier this year. But hopefully they don't. They see reason, realise that they might have won the battle, but they've lost the war in that respect. So yeah, without further ado, I'm happy to move on to run through some of the things that I'd like to talk about today.
Fantastic, thank you.
Cool. Okay, so just what are we looking at today? Ready mixed concrete case was a very important case for determining employment status, and that was up until we had the Supreme Court ruling from the PGMOL case. Following the PGMOL case, we'll then look at how the first tier tribunal approaches employment status in PGMOL, and then whether if you need to go back or should go back and look at any reassessments of employment status determinations you've made following the Supreme Court ruling. We'll also touch upon what I'm seeing in reality in terms of HMRC enforcement and some of the things that are happening there. And we'll also look at some of the practical steps that you can take to manage your risk in employment status determinations. I'll also touch upon a nuanced case that I'm actually working on with regards to the umbrella company rules. So whilst not linked to PGMOL, it is one of those that's tenuously linked through temporary workers and labour supply chain. And at the end, we'll have time for questions and answers. And of course, if you've got any questions, feel free to send those through as we go through the presentation. And for any questions that we can't answer on the day, I will come back later. Okay. So, as I mentioned, up until the Supreme Court ruling on PGMOL, the long-standing practice had been to determine employment status using a three-limb test that was set out in the ready mixed concrete case back in 1968. So where personal service is present, the requirement was to assess whether there were mutual obligations and control and right of control were present. Where they were present, then we would go on to look at all other factors and take the big picture view as to whether an arrangement was employment or self-employment. Now, notice here the hurdles for mutuality, obligation and control. Both of these under ready mixed concrete set a high bar for those tests to be met. And including on mutual obligations, that would be more than just whether if somebody's getting a work pay bargain. It'll also look at whether if you've got any ongoing relationships. So as I say, these tests here were quite high bars to meet. So often employment status could be determined that it was self-employment where none of those three were present. So then just moving on then. So what happened with the Supreme Court ruling from the PGMOL case was that, and again here, just look at the hurdles for mutuality of obligation and control. So what happened is HMRC contested that there were what's called irreducible minimums for mutual obligations and control, and those were sufficient for an employment status to be deemed. Now, the Supreme Court, having heard all the evidence and taken into account the previous decisions of the courts and tribunals below, gave a ruling that actually the irreducible minimums of mutual obligation, which is just the pay work bargain, so that's where somebody provides their services in return for a payment, and control, which was just as easy as something as a framework of control. So that could be something that just sets out regulations or just some sort of overarching control framework. Those were low bars to be that were met. And actually what the Supreme Court did was to say, we agree with HMRC that these are the irreducible minimums. They are relevant for assessing employment status, but they're not demonstrative on their own. Therefore, when these low bars are met, we then need to go back and consider all other factors and indicators of the arrangement. One thing just to note here is that the courts are tending now to view where contractual arrangements are in place, those contractual arrangements are taken as what was intended. So where we may have been familiar with substance over form, i.e. looking at what happens in practice and what happened or what was written down in contracts, and taking what happens in practice as the position, actually the courts are changing that slightly to say that where there is a clear contractual arrangement, that will take precedent even if you do something differently in practice. But it still remains that if a contractual arrangement is silent on a particular aspect, then the courts will still look at what happens in practice. So what happened here is once the Supreme Court had ruled that the irreducible minimums were met, they referred the case back to the first tier tribunal in order for them to consider the employment status of the professional referees. And again, this is where I come back to that, HMRC had won its battle in terms of saying that mutual obligations and control were relatively low bars to meet. But actually, they've then gone on to lose that war in terms of the first tier tribunal. So let's just have a look at then what the first tier tribunal found once the all other factors were considered. So the first tier tribunal had followed the long-standing process, and they'd looked at the three-limb test, the three-stage test, and as you'll see on the slides here, the first thing that needs to be present is personal service in order for an employment or deemed employment relationship to be present. So personal service can quite simply be that you require an individual to provide their services, or there's no unfettered right to substitution, or as the end client, you have a right of veto over those over any substitute. So where those conditions are met, personal service is present. So that's a tick to say, yeah, we now need to look at some of the other arrangements. So we're still looking at the mutual obligations. And again, this is just the work pay bargain, where somebody provides their services in return for some form of remuneration. Those mutual obligations are sufficient for this irreducible minimum test to be met. Where somebody is being paid for providing their services, we then need to look at the stage 2 test, and that is the control. And here we're looking at, is there a framework of control? That could be regulatory, it could just be gatekeeping. So something that is relatively low bar meets that irreducible minimum test. Mm-hmm. What we then say is that where those conditions are met, we now go back to considering all other factors, and we look at the big picture here. So we'll consider things such as whether somebody's part and parcel of an organisation. We'll look at the quality of control. We'll look at the quality of mutual obligations. We'll look at substitution. We'll also look at whether somebody's bearing a financial risk. So once we take into account all those other factors, we then need to do an evaluation exercise to determine whether if the arrangement is something that's more akin to an employment relationship or a deemed self-employment relationship.
And presumably then, Glenn, it's important to document that bigger picture analysis, isn't it? Because it sounds like it's, we're all very used to the CEST tool, which I know you're going to talk about later, but it's not just a case of going down that, is it? It's not that simplistic. But presumably if advisors and clients are looking at the bigger picture, they then need to document the factors they've considered and so on, so that if it's challenged later, they can produce that and they have a robust argument.
Yeah, that's right, Sarah. And as I say, I will be touching on CEST and some of the governance around employment status later in this presentation. But you're absolutely right. Keeping those contemporaneous notes of how you've arrived at a decision are crucial for deciding or defending an HMRC challenge on an employment status case. Particularly what we are seeing, or what I am seeing in HMRC inquiries now, is that where you're able to provide that sound governance and that robust record keeping, some of those inquiries are being shut down before HMRC even go on to consider individual engagements. Okay, so following the first tier tribunal approach, which seems to have now fall in line with the ready mix concrete case that we were doing previously. So we look at that 3-stage approach. We now need to think about, well, what's happened following the Supreme Court ruling back in 2024, where they had ruled that the irreducible minimums had been met, and how has that impacted your decisions in determining employment status? So then just moving on, so do you need to reassess any of those determinations, particularly those since 2024? So what I'm talking to my clients about, and other professionals, it is certainly around that if you've made a deemed employment decision following the Supreme Court ruling to say that the low bar for mutual obligations or the low bar for control were sufficient for you to say, actually, we think that this was it should be a deemed employment status, then now's your opportunity to go back following the first tier tribunal ruling to look at those arrangements, those determinations, and think about, let's not just look at those irreducible minimums, but let's look at the quality of control. Let's look at the quality of mutual obligations. So on the control, go back and think about the how, the when, the what, the why. Look at all those tests that you might be familiar with under employment status. And also with mutual obligations, think about, do you have any ongoing relationships with your contractors? Are the contracts for a specific service, or are they open-ended? What's happening on, is there an expectation the contracts will be renewed, once they come to their end date or not? So again, when we go back and we look at this stage 3 in this evaluation exercise, we want to be looking at all these factors, when to reassess those employment status decisions. One other thing to think about, though, is that in recent years, HMRC has won a number of IR35 cases, but that's been particularly in sort of like the media, TV area, and it did throw out some rulings that we thought were pretty narrow, and sort of went against that grain of looking at the big picture. So one particular case which may be familiar with was the Adrian Charles case, where he won that mainly on the basis that he could prove he was in business on his own account. So conversely, if you've made decisions where you've relied on that business own account being the main factor for determining your employment status, you might want to go back and look at those just to reassess all other factors following the first tier tribunal ruling.
So it's a very bespoke sort of approach, isn't it? Presumably for advisors, some of their clients will need to go back and revisit and others won't, and it's going to be going through on a case-by-case basis, thinking about everybody and their own circumstances, isn't it?
That's right, Sarah. So again, what I'm working with my clients on here are that those who continue to follow, let's look at the big picture, let's look at everything. Those are generally okay. We're not going back and re-examining those employment status decisions. But as I say, it's those that have perhaps made those status decisions following the Supreme Court ruling on PGMOL, or particularly the Adrian Charles case, where they were basing it purely on business, on someone being in business on their own account.
Mm.
So,
thank you.
So, as I say, that just sort of like summarises where we are in terms of the impact of the Supreme Court ruling on PGMOL and the first tier tribunal outcome of that. And again, the first tier tribunal deemed that those referees were not self-employed in as the tribunal said, not so finely balanced case. So again, HMRC took this case, on to the Supreme Court over 10 years, and ultimately the first tier tribunal have ruled in favour of the taxpayer. So again, we're just still within that appeal period for HMRC to see if anything happens, but I've not heard anything yet to give any indication that HMRC are going to challenge that decision. So again, if they don't, it gives us that some sort of stability that we are looking at the 3-stage approach to determining employment status. So just moving on then to some of HMRC's enforcement. So some of the things we're seeing here are that HMRC activity, they've increased the number of compliance officers who are conducting IR35 employment status reviews. They have focused previously on large size organisations, but they're realising that actually some of the errors around compliance with IR35 rules are more around the medium-sized and owner-managed businesses. So we're starting to see a shift in the number of those types of businesses that are getting selected for an IR35 or employment status review. And one of the reasons behind that is HMRC are finding that they don't have the sound governance to underpin their either determinations or the how they go about approaching employment status. We're also seeing HMRC challenge reliance on employment status tools. So you may be familiar with the CEST, which is HMRC's tool, or some of those commercial tools as well. So I've seen and heard of some of those employment status determinations that have relied on CEST or those commercial tools have been successfully overturned by HMRC in an IR35 inquiry. And some of the reason again behind that is because when the decisions were made, the business relied on the tool itself rather than going through and doing more of a critical, analytical review of the arrangement and then documenting why they perhaps had a self-employment status, determination that they've arrived at, and HMRC could challenge otherwise.
This is really interesting to me, Glenn, isn't it? Because for many years now, people have said, almost in passing, kind of off the cuff, well, obviously, HMRC have said they'll stand by the CEST tool if it's correctly completed. So it seems to me to be quite a big change, actually, because people have completed them, they've filed them, they've produced them on due diligence and just assume that means that, everything's okay. But actually, what you're saying, it's just not the case anymore. It's quite a big change, isn't it?
Yeah, that's right, Sarah. So we are, as I say, we are seeing that, but then some of the cases that HMRC are looking at are that yes, they've said they will stand by CEST so long as it's correctly completed, but the way their questions are worded and framed on CEST is quite a blunt tool. So unless you're specifically working in this area, you can answer the questions as genuinely and honestly as you think they should be answered. But actually, it's not until that typical that analogy of peeling back the onion and looking at all the different layers that you actually find out that the way you've answered the question may not align to the underlying arrangements. So we're certainly seeing some challenges there. Some of the common errors that are coming out of these IR35 reviews, and as you may have heard me mention on a few occasions now, it's that sound governance. That really is, having that in place is your first line and best line of defence in an IR35 or employment status HMRC review. Where you don't have that in place, then HMRC are more likely to go onto a deeper dive and look at some, on a sample basis, some of the determinations you've made and challenge those. Some of the other areas we're seeing is that whilst we talk about IR35, it is used as a generic term to cover what are arrangements between a personal service company, so that's somebody who is providing their services through their own limited company, to a small size organisation, or to medium large size organisations or public bodies. So there are different rules. So where a small organisation engages with a personal service company, then the onus to determine employment status sits with that personal service company. But with medium, large-sized organisations or public bodies, the onus falls upon those organisations as the end client to determine employment status. And what we're seeing are some errors in that those businesses that are right on the cusp of whether if they're small or medium, particularly, they're not correctly identifying themselves as to which category they fall into and which set of rules apply. So that's something, I say anyone who, is around that 10 million, 20 million pound turnover threshold, you've got some of those assets on your balance sheet and more than 50 employees. If you're meeting those sorts of tests, then, that's one for you to really pay attention to as to which set of rules apply.
And I know, Glenn, when we talked about this before, you were saying that whereas with the corporation tax rules, you get a year of grace when you're no longer small, that doesn't apply here, does it? So from what you said, you're sort of straight into the new rules as soon as you breach those thresholds, aren't you? So there's perhaps not as much time as people might expect to deal with it.
Yeah, that's right, Sarah. And some of it can come down to the timing of your accounting period. So normally you would look at, when does your accounting period end, and then look at the next 6th of April, and that's when the rules will apply. So as you see, on that, depending when your accounting periods end, you could have, a bit more of a grace period, or it could be something that comes upon you quite quickly. So, definitely one, Sarah, to really pay attention to. Just as you say, don't assume that you've got a grace period, that might extend 18 months or something like that, because that may not be the case.
Presumably, as always, as we say to people all the time, getting advice early is the key, isn't it? So, don't leave it until you breach the thresholds. Obviously, as soon as you know that's going to be the case, then start to get the advice so you're ready.
That's right. That's right. So, and some of the other areas we're seeing is actually your identification of your off payroll labour. So, is somebody providing their services through their personal service company or another type of intermediary, which could be, like a limited liability partnership, or are you in fact engaging with the individual directly as a sole trader? And again, that is so important, particularly for those medium, large size and organisations and public bodies, because there are certain rules under the off payroll working legislation that those bodies need to follow where they're engaging with personal service companies. However, whilst regardless of the size or type of organisation that engages with the sole trader, there's no specific rules that you need to follow. I'm always advise my clients, you should always be doing an employment status determination for those sole traders, just to make sure that, are they genuinely self-employed under the arrangements with you, or is it more of a deemed employment? And just to touch on something that's not tax related, but with sole traders, is that some of the things we're seeing now, and particularly for the lawyers, listening to this, may be familiar that where personal services is present, that could open up this third category of worker status. If an individual wanted to take it through tribunal, and then get entitlement to some of those basic employment rights around, national minimum wage and statutory payments, etc. One of the other areas that we're seeing confusion around is what's an outsourced service. So, just because you engage with an individual on some sort of like service agreement, that's not necessarily an outsourced service. What we're looking at here is, the level of control and autonomy that the provider has over their work. Or the services that are being provided, compared to whether if you as the end client, will you have some sort of overview, oversight of or control or reporting supervision over the workers who are providing those services. So if we just think of, as an example here, think of a transformation program that, a business is going through. They want to, change all their IT systems and bring in new software, perhaps a client relationship, some software. Now, if you engage a business to do that and essentially set out some parameters of what you're looking for, leave them to go away and deal with that, their workers, their employees do it on their own site, then we're perhaps looking at, that's a genuine outsourced service. But if you're engaging a few individuals and they come into your business premises and you can then, they sit down with some of your team and they work with them to put this program together, then actually that may not be such an outsourced service. And we're back into those types of arrangements are going to fall into employment status, IR35 and off payroll working legislation. So as I say, that's just one to be really careful of. Just because something is badged as an outsourced service, it doesn't necessarily mean that it is. And again, as I've mentioned, with regards to CEST and status tools, so following PGMOL, HMRC are not intending to update their CEST because the irreducible minimums have been met, and they've always considered that to be the case. Some of the other things that I've mentioned already is that the person who's completing CEST, they're perhaps not understanding the true nature of the services that are provided. So again, if you have responsibility for determining employment status and you're relying on information from, say, a hiring manager, sit down with that hiring manager and just understand exactly how that hiring manager intends the services to be used. And again, some of the other things we're seeing are the misuse of tools in practice. So again, somebody might, what we've seen is, people have been completing, employment status determinations, coming out with a result that perhaps is more employment, and then go back and answer, change some of the questions, the answers to those questions to get a more favourable result. So again, just be careful of that, because where that's found, actually you could be into more of deliberate behaviour to try and to manipulate the actual arrangements and the outcome.
Thank you. As you've been going through that, it strikes me that everything's coming back to the same point, isn't it, over and over, which is it's all around that really detailed analysis of the specific circumstances, and it's going to be bespoke to each case, isn't it? The outsourced services comes back to that point, doesn't it? The understanding the nature of the services provided comes back to that point. It's all the same principle, isn't it?
It is, Sarah, and there's no substitute really for sitting down and actually going through this in a level of detail to understand how the arrangements work. Look at the contract as well to determine when to arrive at your determination, and it really is documenting the reasons why you've arrived at that decision. We all know people are busy. They've got other calls on their time. It may not be their specialist area. That it might be that people in an organisation that these responsibilities have been put upon them. So we know that, HMRC knows that, but again, I just keep stressing that this can have big ramifications on a business if they engage a lot of off-payroll workers and perhaps take a more of a light touch to determining employment status, particularly when HMRC come in and discover that there's a deemed employment relationship for those contractors, and I think that sort of will lead into something I'll touch upon, in later in this presentation around, some of the outcomes of what happens if HMRC do reclassify, the employment status of your contractor workforce.
The other time I've seen it come up, Glenn, as well as HMRC looking into it, is on due diligence. If there's a sale, this comes up all the time, doesn't it? And then you have price chips, you have exclusions from warranties and indemnities insurance, all these types of issues that crop up. And the thing I've seen, obviously, is that it can really multiply, can't it? Because it's not necessarily just one person for, a year or two, as if a company's got 20 contractors with issues going back 5 years or something, it can really multiply up to be quite a significant sum at stake, can't it, actually? So I've seen that on the kind of commercial side as well as the HMRC challenges. Yeah,
and absolutely right, Sarah. So again, if any organisation that's building up for a sale, or a merger, that's in your plans. IR35, I've seen it as, sinking deals. It really can be that significant, or as you say, significant price chips, and indemnities, warranties, etc. So, it's not just risking it in terms of will I, when would I receive, an HMRC IR35 inquiry notice. As you say, it's also those businesses that are thinking of expansion and merging and acquiring. You're impacted by this too. Okay, so some of the other things that we're seeing is that under this HMRC's enforcement, in terms of the calculations, the approach HMRC are taking is that the liability, so you establish the payments that have been made that where there's been a reclassification from self-employment to employment, identify those payments that have been made in the year, and then you apply a tax code BR or DO. So you're taxing at either 20% or 40%. And the reason for that is that under normal PAYE rules, where you're not the main employer, that those are the tax codes that you would need to operate. So unless you've received notice from HMRC of some other code, then if you are going through one of those reclassification exercises and to calculate liabilities, it will be calculated on a BR or DO tax code. And usually that's because the personal allowance, the main tax code, is sat with the individual's, with the worker's personal service company. You can deduct allowable employment expenses, but just make sure that employment rules for expenses are a lot more stringent than somebody who's self-employed. And there's also now a set-off available for the contractors' taxes that they've already paid for the payments that are going through this reclassification. But that can include, if they're in a personal service company, their corporation tax that's been paid on those payments. It can include their personal tax and national insurance and dividend tax. So those taxes can get taken into account so that when you arrive at what the liability would be, you can ask HMRC to set off for those taxes that have already been paid. However, one thing that you do need to do is to provide sufficient information for HMRC to track down the tax records of those individuals or those personal service companies. So that can be things such as UTRs, whether that's the company or the personal one, national insurance numbers, company registration numbers, addresses. You want to be collecting all that information so that if there is a reclassification, you end up with a liability and you want to claim that set off for the taxes already paid by the contractor, the HMRC will be looking for that level of detail. And if they don't get that level of detail, then you may well find that you're left paying the bill that you may not otherwise have to. So some of the pitfalls around applying for a set-off is that perhaps the contractor hasn't declared that income to HMRC. That can happen. The personal allowance, so again, as I mentioned, taking that into account in your calculations, stripping it out will increase the overall liability. Conversely, as we mentioned, if you try and reduce the payments in your calculations for any expenses that are not qualifying as under employment rules, that can change. But also the amount of tax that's actually paid by the contractor can be lower on the payments because they've got their own business expenses and tax reliefs that they've claimed through their accounts and self-assessment returns. So again, dealing particularly with limited companies, if they have retained profits, so they leave the money in the business, perhaps the only tax to set off there could be corporation tax. Whereas somebody who's drawn out their income, there could be some dividend tax or income tax and NICs that could also be claimed for a set off. There's also the timing of the filing of tax returns. So as we know, with our filings for corporate and self-assessment returns and the due dates of payment, depending on when an IR35 inquiry is concluded and you're asking for that set-off, there could be a delay before the relevant year's tax returns have been filed. So whilst this all sounds like maybe a bit of a scare story, and what the outcomes can be, there are some things you can do to manage that risk. And again, emphasising throughout this presentation is document your processes and policies. That is your number one defence, and your record keeping. So again, documenting everything, every decision you've made, and supporting it with the reasons why. Those are your key defences in a IR35 inquiry. But also keep up to date. So follow. You can receive emails from HMRC on IR35. They provide some training webinars as well, but also look out for events such as this one here, for those updates, just to keep you abreast of what the latest news and what's going on. So some of the practical steps you can take is to reevaluate your employment status decisions periodically, particularly those that are ongoing, and perhaps you get to an end of a contract term and then it's automatically renewed. So again, I'd be looking at these to say every 6 to 12 months, if you've got long-standing arrangements with contractors, just go back and review those arrangements, just in case anything has changed, which might mean that the original employment status decision needs to be reversed. And as I mentioned previously, make sure your contracts reflect the reality of the arrangements. Putting in place a contract that might sound great for IR35, but you're operating in a different way, can cause ramifications further down the line, particularly if it goes to tribunal, because the courts will look at saying, well, what does the contract really say? And they will probably go with that, over and above what's going on in practice. But again, there's also that piece around, HMRC, where there is a difference between what you've written down in a contract and what's happening in practice. It just doesn't look good from an HMRC's perspective, and they will view that through a lens that perhaps is unfavourable for you. So just on the broader landscape then, case law determines employment status. There is no legislation for this. So, whilst we've got the first tier tribunal that seems to bring it back down to more of a common sense approach, even though it can be complex, case law, in the future could change that. So keep it on top of that. As well, HMRC occasionally changes its approaches to how it considers employment status. So keep abreast of HMRC news. And again, we've had the introduction of the Fair Work Agency from April this year, and we just don't know at the moment how that's going to impact employment status. But what we do know is that one of the remits of the agency is to look at this middle area of worker status. So, that could have an impact on wider employment status in the future. So just in terms of PGMOL and employment status, that just concludes this part of the presentation. But as I mentioned at the outset, it's just to share with you a live case that I'm working on the umbrella company rules. And as you will probably be familiar with, the joint and several law rules for umbrella companies came in from April this year. So what I'm seeing is that this particular client engages with temporary workers, and that can be agency workers, it can be self-employed contractors, personal service companies, through agencies. Now, one of the things that they do is, for the compliance of that labour supply chain, is outsource it to a third party. But what we've now seen is that this third party considers that labour supply agencies, recruitment agencies, meet the conditions for an umbrella company. So regarded the end client as a relevant party under the joint and several rules. This third party was then suggesting that they would charge extra fees for enhanced umbrella company checks to the client. So it seems that, there's opportunity there for, some businesses to make, some extra fees out of these joint and several rules. But the reality of the situation was that, even if you outsource your compliance, it doesn't protect you against joint and several liability. So again, making sure that you understand who you're engaging with, whether if you're a relevant party or not for the umbrella company rules, is really, really important. At the moment, it's not going to give you any protection if that umbrella company doesn't pay over the PAYE. But one of the other things we saw out of this is that the agency confirmed that its workers engaged under a contract for services, so they're not employed by the agency. And what this third party was missing was that for an umbrella company, to exist, the individuals need to be employees of the umbrella company. So, I've actually been pushing back to this third party and saying, look, I think you've misunderstood the rules here, because the agency workers are either on an agency worker contract or a Lim B contract. They're not on an employment contract, therefore the umbrella rules can't apply. Now, we've had some pushback from from them again, but we've gone back. The legislation is clear that for an umbrella company, then the workers need to be employees of that umbrella company. So what's happened here is that ultimately, the client could have ended up paying unnecessary additional fees for umbrella company checks when they're not due. So as I say, a very nuanced piece around the umbrella company rules, but just be careful that if you do hear of third-party compliance companies in the labour supply chains charging for umbrella company checks, just make sure that there is a genuine umbrella company, and whether if you or your end client is actually a relevant party for the umbrella company rules. And I guess just to touch on that, relevant parties is, the broad rules are that where an end client engages with the umbrella company, then the end client is a relevant party and liable under the joint and several liability rules. Where there's an agency in the middle between the umbrella and the end client, then the umbrella and the agency are the relevant parties. But there is an exclusion to that in terms of if the umbrella and the agency are connected, then the relevant parties are all three, including the end client. So just a brief overview there of relevant parties for umbrella company rules.
Thank you, Glenn. That's really helpful. It's always really, really good to hear about live cases, obviously massively relevant. And I'm sure that if anybody on the call would like a full session on umbrella companies and the rules and the changes, then we can certainly do that. We're always keen to make these sessions as relevant as possible. So please do let us know if that's something that would be of interest.
Yeah, definitely, Sarah. Is umbrella company rules is one of those areas that's probably worth a session on its own, to get to grips with. But as I say, this particular case is nuanced. And it is linked to that temporary labour supply. So just thought I'd share these insights with the audience.
Thank you. That's very helpful.
Okay, cool. So just on that, umbrella company rules, they are confusing. IR35, employment status, it can be, a minefield to get through as well. It's all very, very subjective. So it's just to open up now if there's any questions that anyone's raised, and we can answer in this session.
Thank you. We have had some questions. So I'll start with one on umbrella companies, because obviously then we won't be jumping backwards and forwards. So on the umbrella companies that you've just talked about, the question says, if they charge for enhanced checks, is the end client still not protected against liability?
No, they're not as the rules stand at the moment. So HMRC has been clear that there is no defence for taking reasonable care. So you do your due diligence, record everything about the umbrella company. They look bona fide. They assure you that they're complying with the umbrella company rules. That's great. I would never suggest you don't do that due diligence otherwise. But as the rules stand at the moment, HMRC aren't viewing that as a defence. However, I was talking with a big four firm of accountancies this morning, and some of the things that they've seen are that organisations are taking that due diligence. They are keeping it, particularly because this is new legislation. It's untested in the courts, and it might be that this is your defence if HMRC found unfavourably against you and you took it to tribunal. So, I think across the board in the professions, as most people here will know, document that, keep your evidence. There's no substitute for doing your due diligence as your best line of defence. But as I say, the way the legislation's written at the moment, HMRC would still look to a relevant party for the PAYE that's due.
Thank you. That's really interesting, really helpful to know. We've had another question. So back onto IR35 now. For mutuality, how do you or HMRC assess the obligation to accept work or not? Surely anyone who's an independent contractor can refuse work if they so choose. Do they have to evidence that they have done so? I think that's a really interesting question.
It is. And as I say, the Supreme Court ruling was, took it down to the very bare bones. And it's a position that HMRC had taken for, a number of years now, is that mutual obligations, where somebody provides their services and they receive a payment, that is mutual obligations. So when we think of, this first tier tribunal ruling, providing somebody's being paid for providing their services, that test is met. However, when we then go and look at the bigger picture, we do then look at to say, well, what happens if somebody refuses work? What happens? Are there ongoing automatic contract renewals? Is there an end date? What's the termination stipulations in the contract? So that's where we end up when we look at the big picture. We look at the quality of that mutual obligation. So as I say, the very first test is if you're paid for providing your services, then we've still got the framework and control in place. You're providing your services personally. We need to look at that bigger picture, but that's where we do that more qualitative exercise around the control and the mutual obligations testing.
Thank you. That's really helpful. Another question again on IR35. Are there any insurance products to protect against IR35 liability?
No. There's a lot of conversations around IR35 and insurance and all that sort of stuff. But at the end of the day, HMRC will come in, and if they find the liability is due, the liability is due.
Thank you. And then again, IR35, how strongly can or should a PSC rely on the inside or outside IR35 contract determination set by the engager or agency?
So if we're talking about the personal service company here, really the responsibilities and the obligations fall on the end client. They're the ones who bear the risk. So the personal service company itself is hardly has hardly any exposure, but where they perhaps could fall foul is if they really know that the way they're operating is sort of like under a deemed employment relationship, and perhaps they've agreed with the end client that, let's call it outside R35, it's a genuine self-employment, then you could find HMRC looking then at the PSC as well, bringing them within the scope, because you've done something there that perhaps isn't as clean as it should be. So, but broadly, as I say, the risk sits with the end client under the off-payroll working rules, and if the end client has made that determination, then as the personal service company can go with that. However, I would just also say that if the personal service company receives an inside IR35 determination and they think it's wrong, they can appeal to the end client to say, actually, we think you arrived at the wrong decision because of these extra facts need to be taken into account and ask them to reassess.
Thank you. There's a question we had submitted before the session, actually, where somebody asked if there are any particular sectors that HMRC seem to be focusing on in respect of IR35, and as advisors, should they be prioritising looking at any clients in any particular sector above others, which I thought was an interesting way of sort of triaging who needs to be dealt with first, almost.
Yeah, so not in terms of industries or sectors, but as I mentioned, we have seen HMRC starting to target those medium-sized businesses and those owner-managed businesses as well. So that's where HMRC are starting to identify that they're perhaps getting the better recoveries from their IR35 reviews. They also know with large organisations, they're probably the ones who've invested in putting together in place all that sound governance. So as I say, not on a specific sector or industry, but each sector and industry might have its own nuances when we look at the employment status, indicators and how relevant they are in determining status. But as I say, HMRC, it's more about the size and type of business that they're looking for.
Mm-hmm. Thank you. And we'll do one final question, which is my question to wrap up, and then we will close because we're nearly at an hour. So my question, I'm really interested to hear your view on this, is what would you say is the single biggest misconception you still see from clients when it comes to employment status? And has anything in the PGMOL case helped to either reinforce that or to correct that misunderstanding? Because there are lots of misunderstandings around about this area, aren't there?
There are, and I wouldn't say there's one of the things that I see more often than not are it's not fully understanding the arrangements around employment status and what they actually mean. So I'm working with a large business at the moment. Employment status determinations are sat with HR. They're not specialists in this area. And when you sit down and talk with them, and sort of ask them why they've concluded at decisions that they have done, whilst it sounds reasonable from their perspective, it's clear that they've not perhaps fully understood what the perhaps the indicator is driving at, all those things around, when we look at control, we look at how somebody does the work, what they're doing, when do they do it and where do they do it? It's really understanding what does that mean? So I'm finding that those are the types of things that are causing problems in IR35, employment status determinations.
Interesting. Thank you. Well, thank you, Glenn, for what's been a really interesting and informative session. And in particular, I always think it's really helpful because these calls are aimed at advisors, to have some practical takeaways. So I really like the fact that you talked about governance, looking at processes, looking at record keeping, making sure that's in place, the practicalities of reevaluating contracts versus reality and making sure the contract does reflect reality and revisiting that regularly, and also keeping an eye on the landscape and the case law and HMRC approach. So I think those practical pointers are in particular really, really helpful for people. So thank you for that. For our attendees, thank you again for joining us. Someone has said it would be useful to have a session on umbrella companies, so watch this space on that. We'll try to get that in place for you. If you would like a CPD certificate for this hour, we can provide that because you've attended live. So please do get in touch, either email or LinkedIn, and we can arrange a CPD certificate for you. Next month's session in July is going to be on R&D tax credits with our specialist Will Rainford, which is R&D, obviously, as we all know, there's been a huge amount of change and changed the risk profile in recent years. So Will's going to be talking about the new regime and clarifying some misconceptions on that and how that works. So details of that will be circulated very shortly. So thank you all for joining. Really appreciate you giving your time, and we look forward to seeing you next time.
Great. Thanks, everyone. Thanks, Sarah.
Thanks. Bye.
Bye-bye.